CME Group launched Micro E-mini futures contracts. Discover how a smaller Micro E-mini futures contract opens the world to greater trading possibilities.
Welcome to Striking an Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Bob Icino. Welcome, Bob.
Thanks for having me again, Jeff.
Always great to have you, Bob. So it's interesting. This week, the S&P 500 surged again to new all-time highs. But now, Bob, we are in an earnings season. What's your focus as earnings season is kicking off?
Well, earnings. And again, it's still all about the Fed, right? Earnings can derail the plans of the Fed or reinforce them.
Well, so the expectations, certainly those are diminished expectations going into this earnings season, but we do see banks coming out of the gate. Those have been the laggards all year. Are you looking for a surprise in a certain sector?
No, I'm not. I think the bar is low, as you mentioned. It's a hurdle I can jump over, being a lot shorter than you. I think it's a better situation for earnings with the lowered bar.
Well, we're just going to leave that right there, pal, and get into the first lightning round. Are you ready?
Ready for it.
Crude oil. Well, crude oil has been really interesting, vaulted above $60. Where's crude headed now, Bob?
Well, I think right now what you're seeing is crude oil that's got a bullish trend to it. It's pulling back a little bit. So the example I want to look at is buying the week 4 July 64.66 call spread in crude oil. So I'm buying the $64 call for $110, and I'm selling the $66 call for $50. The buying of this call spread costs an investor about $60.
So I find this really interesting. Let's get a little bit deeper into the why. This call spread, it's about $3 out of the money here, but help me understand the why of going in and buying this call spread for a very inexpensive price.
Well, look at it from this perspective. Crude oil is above the 50-day moving average, above the 200, and there are Iranian tensions and tensions in the Gulf kind of simmering, but we're not getting above $61. Haven't been above there since about May 23rd. So if we get a flare up of those tensions, I think this call spread will do really well.
Oh, this makes a lot of sense. So the potential collect on this call spread, if we see one of those events come to fruition, is $1,940. That's a small risk for a big reward. And remember, these August futures were trading around $59.62, and the at-the-money volatility was trading $29.65. Pretty low on at-the-money vol.
Yeah, again, that's why this call spread is so cheap. And again, it's lower probability, but it's got a good shot at it.
Fantastic, Bob. Please remember, these are trade examples, not trade recommendations. Let's move to the second lightning round.
Let's do it.
To infinity and beyond. Well, Buzz Lightyear markets are here, Bob. It's amazing to see the E-mini S&P 500 above 3,000, substantially above 3,000. What are your thoughts going into this earnings week and as we see this elevated S&P price?
Well, overall, again, with the Fed potentially cutting rates, it's a decent opportunity for the Russell. But in terms of earnings, you have to look at tech, I think.
Well, I think you have to look at tech. We're obviously going to see banks coming out of the gate here this week, but I want to look at a trade example because I think we may see a little bit of a breather in this fantastic rally. So I want to be a seller of the 30/50 call. That's interesting because that strike, Bob, is going to collect about $230. It's about 1% out of the money, but I'm also going to buy that upside call at $3,100. So by selling this call spread, this is going to allow an investor to potentially collect about $190 in the event earnings season gives us a little bit of turbulence or at least a pause.
Yeah, and it seems like the markets are not expecting that kind of turbulence with at-the-money volatility right around 878.
Well, it's interesting to see because not only are we talking about selling call spreads, we also look at the Micro E-mini contracts. If you have some expectations or you want to feather out of some exposure, you can use those Micro E-mini futures contracts and sell it $3,100, $3,150, wherever you think earnings seasons may go.
Yeah, these are the kind of products that traders get really excited about as they develop.
All right, Bob, thanks as always for hopping on to Striking Options, and please tune in every week as we will continue to strike options.